Now, if you're shopping for a home and you keep hearing the term interest rate and APR tossed around like they're the same thing, well, spoiler alert, they are not. But don't worry, I've got you covered. In this edition of 2 Minute Tuesday, I'm going to cover interest rate and APR in detail, in plain English though, so you can walk away actually understanding what they mean. But before we go diving in, be sure to hit that like button and subscribe so you don't miss any future tips. The whole point of these videos is to make home buying a little less stressful, one bite-sized video after another, and maybe have a little fun in the process. So let's break this down without the financial mumbo jumbo and let's fire up the 2-minute timer. Now, to start, think of interest rate as the base cost of borrowing money. It's what the lender charges you to take out the loan, expressed as a percentage. Now, if your loan amount is $700,000 and your interest rate is 6%, you're paying 6% annually just to borrow the money. Simple enough, right? Now, here's where APR, or annual percentage rate, comes into the picture. APR it's a little bit more honest, if you will. It includes interest rate plus other costs tied to the loan, like loan origination fees, mortgage insurance, and some closing costs. Basically, it gives you a much more complete or 360 view of what you're actually paying for. So while the 6% interest rate might look nice, the APR might be 6.5% once those extra fees are factored in. And that's the number that you want to look at when you're comparing loans apple to apple. And here's a quick real world example. Let's say you get two loan offers. Loan A has 5.8% interest rate and an APR of 6.3%. Loan B, this has a 6.1% interest rate and an APR of 6.15. Now, even though loan A has a lower interest rate, loan B has the lower APR. So what does this mean at the end of the day? Well, loan B actually costs you less in the long run. The moral of the story is that it's always good to dig a little deeper into the headline number. So now the question is this: does interest rate or APR matter most? Well, to be honest, they both matter. Interest rate affects your monthly payments, while APR tells you what you're paying over the life of the loan. Think of interest rate as your day-to-day costs, and your APR is the big picture. Makes sense, right? Now, if all of this still feels a little murky, friends, don't sweat it. Talk to your real estate agent and your lender. They're there to help you understand exactly what you're signing up for. And of course, if you have questions, drop comments down below or message me. I'm always happy to explain further or tackle any other real estate topics that you're curious about. And as we wind down this video, look, if you're looking to buy or sell a home in the near future, give me a ring. I'd be happy to sit down with you. I'm a local real estate agent who's called California home for the better part of 30 years. And as always, thanks for watching. And friends, I will see you in the next video.